Good morning, everyone. This is Daily Trading Analysis with a market update, quick recap of yesterday's price action and also fundamental. Let me tell you, today we have very interesting technical analysis on charts which are in a very critical spot. We are going to review those, but first, let's review the fundamentals. We got PPI month over month and year over year. Well, way higher than expected. Way higher than expected. We were expecting the same kind of data, 0.4% on the month over month, and we got 0.7, crashing expectations. And also year over year, we were expecting a little bit of increase, and we demolished that increase with 1.6%. And not only that, we also got core PPI year over year and core PPI month over month. Month over month, the expectations were met at 0.2%, so we got a downtick from the 0.4% on the previous month. But year over year, we are also as expected and in line with expectations and in line with the previous month. That coupled with the fact that we got retail sales at 2.5%, a little bit lower, and excluding gas and autos, month over month, we got also a decrease to 0.2%. Month over month, though, look at this, 0.6%, crashing expectations of 0.2%, and excluding autos, month over month, also crashing expectations. Finally, initial jobless claims came way softer than expected, increasing on the previous one, but softer than expected. Markets are always expecting labor market to increase the jobless claims, but we are not meeting those expectations and we are getting lower data than expected. So in summary, PPI higher than expected, coupled with the fact that year over year it's almost as expected, but core PPI is still there. Retail sales month over month got a huge increase to 0.6%, and jobless claims show signs of labor market still remain strong. These are not good news. These are not good news because we got also yesterday, the day before, we got CPI, and CPI was also showing signs of inflation ticking up due to energy prices going up. So why the markets are going up? That's the main question. Well, it's not only for the data it's not looking good, but it's coupled with the fact that people are optimistic that the energy prices will at some point go down, and that will show the really inflation numbers through the end of the year. And energy prices are there, but this is only fueled, that rip on energy prices is only fueled by supply shortage, because Saudi Arabia and Russia are cutting production. So this is not fueled by a huge demand that the Fed is actually watching. The Fed is watching the demand exceeding the supply, but energy is not that way. Energy is lower supply, but demand still even lower because China is not demanding crude oil. Energy in Europe, apart from natural gas, that is starting to tick a little bit higher ahead of winter. But overall, energy pushing CPI and PPI higher is not as bad as one would think. And that's what markets are thinking. That's why we are not pricing any further interest rate hikes. We are not moving from the 525, 550. Look at this, 97% for next week flat. So pause or skip, would say. And the same kind of move towards cuts in 2024. But just don't forget about this. November and December are the only 2 months that markets at some point price a hike. So that's the thing. People are a little bit scary regarding the inflation ticking higher, but the base of the reasoning of energy pushing higher it's not due to Fed concerns of huge demand. That's the key thing to understand. So let's now move to the charts. And first of all, I would like to start with the UK 100. Look at this beautiful change of trend. If you don't know, ECB, European Central Bank, raised interest rate hikes by 25 basis points to reach 4%. And markets on UK and also in Europe really push higher. Look at this. You see this pivot? We started trying to counter trend this with a huge move up, and we got this zone of really demand. So we basically double tap that, we push higher, we move lower, we establish another trend line that is now more overall 1, 2, and 3. I was watching this. So look at this double bottom, first move up, pull back, and the data comes out. ECB raises interest rates and says that this is a good spot for interest rates and they will be waiting for inflation to come down, basically. So no more rate hikes. UK 100 pushed 2.37%. Look at this candle. Right at resistance, right at supply, right at the trend line. And today we are also moving higher. London Open is about to start and we are already showing signs of bullishness. So why are we reviewing this? Why I'm paying attention also to Europe? Because ECB raised interest rates and the market ripped. So how are we dealing with that on the US market? Well, data show signs of inflation going higher, but not due to demand going higher, but shortage in supply on energy. And people remain, and Wall Street markets remain optimistic regarding the outlook on inflation. And look, where are we right now? We are right at the trend line, right at the weekly. And I think this move might happen. I'm watching this move supporting the trend line, and this is basically, if you trade also stocks, this is an A, B, C, D, and a move higher. This is a typical pattern of long-term support, breakout, and I think this move might happen today. But also I'm watching for the upcoming weeks this kind of move. So this is my bias for the week. We have this interesting pivot right at last week high. This is the pivot at 15,855. Remember, we are talking about December contract on NQ futures. And not only this chart is right at resistance after big data came out, we have also the big tech companies bouncing at some point. Apple is right at the trend line. Microsoft is pushing higher, forgetting about this Nvidia bad day. Tesla is pushing higher, leaving behind the gap towards the new gap from mid-July. Amazon, look at Amazon. Remember that Amazon and Tesla follow consumer discretionary, and this is demand. Look at where are we? August 2022 levels. Look at this huge rip. Breaking out the descending trend line, compression, and move higher. Google is also pushing higher to 2022 levels. We consolidating and we started to look for a move higher to fill that gap. Nvidia is a special case. It's not showing anything basically, but at least we are holding this. And Meta is continue pushing, forgetting about the Nvidia day and putting a nice 2.18% towards 318. So not only European markets are pushing higher after raising interest rates. It's due to the outlook of not going further hikes, and also US markets are at a critical level in which we are expecting the Fed to not raise rates next week. So this is really interesting because markets are quite visual, and I think today has quite an interesting outlook, at least and forecast in my way. I think we have to pay attention to how London opens. Right now, look at these two candles. There's 2 minutes until London opens at 3. And I think we have to remain positive and watch for price action to continue higher. But we are at a critical spot, not only on the Nasdaq, on the big tech stocks. Let's recap metals, because metals are worldwide economy. We supported, we got this beautiful compression on the gold contract. We bounced 1, we bounced 2. We are expecting to rotate to the upper band of the compression and descending resistance, and my outlook, my expectations is to really crash 2000. Gold is looking quite good on the bounce. We had an opportunity to break down and we didn't do it. Copper, Dr. Copper is just showing a good amount of buying right now. So quite interesting. We tried to break this resistance here, but we couldn't second time, and now we are bouncing with a higher low in here. Really bullish chart in my eye. Silver is also showing signs of demand with ascending support and some kind of compression in here towards 7,600. So metals are there. The Russell, it's also bouncing from the 200 daily moving average. So a lot of these equity indices, stocks, metals, futures overall, financials, how are they? Well, they are putting a nice also kind of compression towards this breakout descending resistance. Banks performed really well yesterday. So overall, the only thing that is worrying people is crude oil. Don't get me wrong, this chart, excuse me, this chart is really bad. This is not good. Crude oil above 90, it's destroying the markets. The next level, I think really people is watching is 93, and then 100 is on the table. But look at this move. This is not good. Let me get it straight. This is, don't get me wrong, this is super bad. But this is caused by manipulation from Saudi Arabia and Russia. This is not caused by huge demand spike and wage pressure and things like that. We still have an option of Fed hiking interest rates, but I think this is not a big concern for the markets. Maybe for us at the gas pump will be for sure, but I think this is just manipulation. I still focus on price action. Yesterday's price action was really interesting because, as always, we have to really be patient. We got the numbers, we went down, then we went up, then we went down, and look at where we bounced. We bounced at this level of flash consolidation, push higher, and from Wednesday, this is the spot in which I was watching. I didn't take a long down here. Settlement was also there, but look at these candles. Look at these wicks. People were buying really big time at those lows, these lows. So these lows were basically the zone in which once we broke, we bounced and we start going higher. This was a big spot. The big rejection from the initial and the opening start stepping up. And once we squeezed those sellers, market were not super trendy. but at least it was moving higher and higher and higher. And we closed really, really at a nice level, pressuring this descending resistance. Anything can happen, but I show you why I'm a little bit optimistic on price going higher on the Nasdaq, on the big tech stocks, and on metals. Crude oil is not really bullish for the outlook on the economy and on the inflation, but we already talked about that. Finally, let's talk about the big one, the dollar. Dollar put a nice big candle and we are already at 105. My forecast was right, and this is the only thing that really worries me. This is the dollar performance yesterday after the news, huge push up, bounce, and we continue higher. This was a clear, ascending triangle going higher, dollar strength and markets, stock market going higher. I don't know. Now it's correcting. Now we are getting a little bit of pullback, but we are now at London Open. We are pushing towards the 200 on the 1 minute. So be really careful with the dollar and also with the yields. But overall, look at the dollar because dollar is quite sneaky. We all know that strong dollar is not good for the stock market, and we are getting a big time divergence here. That's the only thing that I'm concerned about. Regarding the rest, just watch the price action. Look at the London Open. Nasdaq is not buying it. London Open pushing higher, Nasdaq not following. Dollar pushing higher. We have a little bit of divergence here. So be careful with that. Be careful with that. Last thing I would like to mention is to talk a little bit about options expiration. Today is 15, we got 4.1 million. Today is quadruple witching day, in which a lot, millions, 4.1 million units of options expire. Look at the max pain, 440, and look at where we are right now, 405, 450. We might see a little bit of pullback. That's consistent with the dollar move and the Nasdaq not following London Open. But a lot of stocks are at resistance. We could reject. Anything can happen. But if you are following the max pain theories, I think today is a good day to really take a look here, because we have really bad divergences, 10 points on the SPI. So we are here and the max pain is just down here. So in this range, we might be doing a lot of chop around and volatility. So 4.1 million, remember, this is huge, and Wall Street don't want to lose money. So I think that's all. I think we covered everything I wanted to cover, and I explained why I think markets are reacting the way we are reacting. Maybe this is an overreaction, over optimism, but price action is king. We can have fundamentals, but at the end of the day, we got a move yesterday. And from the technical analysis standpoint, on the Nasdaq and the big tech companies, we are at a critical spot. So we might push or we might reject. Watch dollar. Dollar is moving. Dollar did push yesterday, and this is a divergence. So be really careful with that. So that's all from my side. I hope you found this video useful. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that discipline and risk management, and more than ever, patience is providing you with a lot of opportunities and is key for your success. I hope you had a good day trading yesterday. Today's Friday and quadruple witching day. Don't ruin your week, please. That's always my recommendation. It's better to lose an opportunity than to lose your account. And that's all. Stay safe, everyone, and see you later on the day after the close to review today's price action.